You better run when the runners run. Show you how to get your money up. Dollar inflated like bubble gum. Markets are jumping like double dutch. Buying up gold till I get a ton. Crypto, yeah, I got some.
I'm glad I know what I know now, but you need to be doing these videos, putting them on like little bit videos of like, what is tokenomics, what is this, and start using your image because he's attractive, he's smart, and like all this stuff to like start, you know, becoming, I don't want to say like a guru, that's not what I mean.
Sure, it
is. So that's why I want to video it because he's very articulate.
You want to video it?
No, I'm sorry, I'm like, because he's super, obviously I'm bragging, it's my son, but he's pretty awesome.
So let's talk about a project before it gets in, and then what we have to do as part of the debt council to underwrite a project and see the viability. We get pitched a lot of third-party projects all the time. We have a couple actually in the works that we'll be actually partnering with. The reality is mostly all the projects are third-party. We're not actually ones out there going out and drilling. It's not. We partner with exploratory companies to actually go do that. I don't have the ability to go manage all these projects that are on the debt ecosystem every single day. I let the experts do that on a daily basis. We go negotiate the best thing we can for the ecosystem and kind of run. Now, the tokenomics basically have to start with what kind of supply do you ever want in the ecosystem at any given time, and what is the max supply that could ever be there. With deliverables, it's based purely off of the projects and the amount of resources that are available to contribute to the ecosystem, because those are paired directly with the amount of token they're going in, because they're linked. So gold, one DLG, digitally linked gold, is worth 1 gram of gold. So you can't go out there and put a ton of token into the ecosystem that you don't actually have the gram of gold for. So there is no max supply. There is no limited supply. It just depends on what is physically readily available and vaulted and or in the process of going from Dore to bullion to coin, okay? We put into the ecosystem 50% of the recoverable gold allocated for the first 12 months of mining from a standard scan protocol. So we try to protect our users by being so conservative that there's no way we're not going to hit that in vaulted. So if a standard 43101, which is basically a government scan of a project, it doesn't tell you what can be recovered, it just tells you what's there. If you basically looked at that, it's probably about 10% of what that scan will basically come in. Our scan goes through the exact same process. It goes and shows what's there. But then what we know is we know the depths and we know what kind of rock it's sitting in. So we can basically take it and then calculate out for recoverables. We take 50% of what we know we can get out, and that's what we monetize into the tokenomics. Now, why do we put it in there in the first year? Put it in the first year because it all gets mined over a decade. So even though we believe we can get out in 12 months, if we're wrong, get out in 2 years, we're fine. 3 years, okay, we're fine. I got 10 years to get to it, and we don't look at anything because it's not recoverable in the first 2 years, then we really screwed up. We protect ourselves by going and partnering with multiple projects that other people are actually out there mining. Now, what we also do is when we go to the Small Minerals Commission and we provide scans for them, they are mandating our scans to be on property as of January. We get a royalty, so when the Ghanaian government takes their tax fee, we get our tax fee collected by the government, and the government actually pays us.
When is that?
Starting in January. So when a concession that we are not operating, we are not mining, we have nothing to do with, goes out there and leases a property, they get a scan, we get a small percentage, just like the government does, in a tax, and the government kicks us back that in gold bullion. That gold bullion then has to go over to our mints. We're in the process of actually creating the 11th world mint, the Ghanaian Royal Mint. That physically will turn into a gram of gold. That gram of gold then is now deliverable. That deliverable will happen when any of the individuals in the ecosystem decides that they want to claim it. What a claiming process is you go to the Royal Ghanaian Mint. Right now it's the Gold Collective. You say, I've got 5 digital leak gold tokens. I would like 5 grams of gold delivered. They will burn the digital counterpart. They will insure the package, and they deliver it to you.
Now you have gold already launched.
Yes.
Is it a focal point right now, or did I hear that you're readjusting, or is it something that we have access to sell at this point? Like, what is the status?
It is something, I'll speak. It will be accessible to resell on the 11th of July.
What is the acronym for that?
DLG.
And we will have access to that?
Yes.
No, they're just nodes, just like anything else, right?
Just like anything else. We aren't doing anything different to the project other than recalibrating the price point we went out for. When we started that project, we felt the price point would be good to start about $5,000 for most individuals we were talking to. We're finding with the sales network and the individuals in, if we bring that back down into a $1,500 number, that is what we're shooting for. We're trying to get to 1,000. I'll just be candid. I don't know if we're going to get there or not. But we believe we can hit $1,500, which makes it more accessible. And what we're going to do is do it in blocks of licenses. So we're not going to have unlimited licenses. When we add new reserves, we'll release an additional block of 10,000 out. That way we never dilute the miners that are currently operating and de-incentivize people from buying. The whole point of you guys being an operating and helping the blockchain isn't to over dilute the mining pools. It's to physically make sure that everybody is getting participation to keep those nodes running. By keeping those nodes running, we can actually start the trackability of the gold. Now, why do we want the trackability of gold? What does that system actually do? When you guys are running those digitally linked gold licenses, what you're really doing is tracking that gold from the exact pit it came out to the mint, all the way from A to Z. What we're adding to that is the deliverables. Now this gets, we're not doing to customers, we're doing to large purchasers. So let's say a bank picks it up, that will actually track directly to the bank vault. If it goes to a custody house or a large financial firm, it'll go to that, and you're not disclosing individuals. So if John Doe decides to say, I want 5 grams, the blockchain stops. We're done. You're gonna get 5 grams of gold, and that's not gonna be tracked to your doorstep. But large cells, we like the data because we want to know where these gold reserves are eventually going to be allocated to, and so do the individual miners. They want to know what resources and community. Think of it as a co-op. And when you basically get a new miner that's in, they want to know, can you actually get us to a cell house to run? When we show the fact we can get you all the way to Switzerland, Dubai, into India, and we can show on blockchain, which is very easily to look, it's just a ledger, they have the comfortability saying, not only are you going to give us a scan, but you're going to actually help us through the co-op dollars to make sure that you're physically getting this for the best value possible, quick as possible, so we have cash flow to continue going. So that's what's basically being built out. Your node license actually is helping all of that operate. So it's a functionality. If we have too many node licenses on, the problem is people aren't making enough money to keep them on. I need them to keep them on so that everything works. So if I sold 100,000 licenses but only had enough to basically pay enough service fee to be people comfortable for 5,000, then you guys are making like a tenth of a penny a day.
Yeah, that's not
Does that make sense? It's not worth keeping it plugged in. I need to make sure that the value derived in it is high enough that you never want to take that thing out of the socket.
Is the token still attached to the profitability of the projects, or is it attached to the actual value of the gold?
Actual value of the gold, with one exception. We are pairing it with debt.
Okay, that's
in my opinion, when you're pairing it with debt, and debt has an upside potential,
yeah.
on paper, it should work. We're already seeing it work, but in theory, if it's paired with a non-tangible link to the gold price, who is ever going to go in and redeem 5 grams of gold when they can redeem it and buy 10 grams of gold? You have some upside potential, but you always have the floor that's available. That gold is vaulted. So if you ever decide, I don't really think DLG will ever get down lower than a gram price, because otherwise everybody's buying it because they'll just buy it and redeem it. So I mean, you're not going to get gram.
You're creating an arbitrage.
You're creating an arbitrage opportunity for too many people that are coming to just buy the digital counterparty. They'll call them and say, please deliver this. They bought grams of gold for $5. They're tickled pink. Does that make sense?
Take to a local pawn shop and get.
Yeah. The local pawn shop will hand them $30 and they're tickled pink. They made a ton of money.
Yeah.
So you kind of have a cool upside potential with a downside protection.
So back to the NATG. Okay, so you've got a lot of different projects that you're excited about. Obviously, gold sounds like one of them, potentially drip in the future. I love that you're launching DET's actual token, and my understanding is that NATG will not be paired with Binance anymore. It'll be paired with DET in the future.
NATG has never been paired with.
Oh, it's not paired with Binance.
Black gold is the only
Purple.
one.
Okay, black gold is paired with Binance. NATG is so. What is NATG?
Debt is paired with Binance too.
Debt is paired with Binance.
Debt is.
So what you have to do is you go into the ecosystem and you sell natural gas to debt to BNB, and ironically, Pancake Swap will actually do that whole transaction for you. But when you see with the flow, it physically shows you the flow down below of how it got to BNB. You can take BNB directly to Tether. It's the Binance wrap Tether, and you can take directly from that into Binance or virtually any other platform and cash it out. But that's how you sell it. How does tokenomics start? It's based off of what we believe, to the best of our capabilities and knowledge, of what the project value is going to be over time. Not today, it's over time. And that is a guess. Understand that physically is an educated guess based off of experience, and a lot more experience that's in this room. But it's based off of the exploratory companies we're dealing with, what finds they found in the past, what finds they currently have that they haven't tapped yet, and we look at it. So everything on NATG is physically done based off of what we already have in the Rolodex. I don't look for what I think I can get in the future. We look at what we currently have there. Now what happens when I go get more? That's upside potential. If we go double our resources, meaning we go double our amount of extractors, we go double our amount of partnerships, I did all the tokenomics, so you unfortunately have to do that day one. We did all that based off of what we had contracted when we launched the project. So what's the limit of what price natural gas can go to? There is no limit. We'll partner with 1,000 exploratory companies over the next 10 years. You have 1,000 exploratory companies going in and buying this with royalties through. Why would those exploratory companies want to partner with me? Scanning technology. Does that make sense? They want a better shot. The natural gas well costs about $18 million to drill. It's deep.
Wow.
That is a big oopsie if you miss.
Yeah.
Harder to miss because natural gas actually, even through standard traditional scans, is easier to find. And sniffers actually can find most of it. Natural gas actually comes up organically through the bedrock if it's gas. It finds its way to the surface. So in most natural gas locations, you physically can look out. Your eyes won't see it, but you'll kind of get that scent every now and then when the wind blows. Sniffers on ground test will actually show you where the acreage is. It's easier to find natural gas purely because it comes up through the ground. It's not like oil doesn't do that.
You can go get soil samples.
You can go get soil samples and the years of that. Now, finding the dome is the important part of this, because in natural gas being a gas, it goes to the highest end. You want to find the highest end to tap there so you can get all of it. If you tap a lower end of it, tap here, and it comes down, you get this. What's natural gas doing? It's rising.
Yeah.
So you get this, and you get some bleed over, but it's not perfect. You tap here, what happens? You get it all. So now you look at the scan, what the scan actually does in a 3D rendering, and if we can get to that dome, at the top, our recoverables are almost in perpetual. Natural gas it's renewable. It's renewable.
As long as you're drilling, correct? Or just in general,
No,
it just
once
goes
you-
anyways.
Once
Those
you
really?
have
So
it,
it's
it just,
A large
The geology
coffer-
within the bedrock will actually recreate.
Which is why the nodes that we have, so to speak, when you were referring to earlier, the nodes 2 years later, just like a paperweight, these potentially have so much more value because of the lifespan and the longevity of the projects.
Yes.
All of our projects are intended to disseminate over a 4,000-day period. So each one of the nodes will last a minimum of 11 years.
Everybody has this thing. They want to know, well, what is it? Let's say the technical, the hardware, and in that is supposed to run for a decade. Now we only warranty it for a year, and rather they can buy another piece of hardware to run them all and go. The software, we do automatic software updates. If we find something better, why do we want to upgrade the software for free? Because we're making more money by offering something that's better to the ecosystem. I don't want to charge people for software upgrades. I don't want to have you buy another version. I want to give that to you because it's going to make everything else function better. The more projects you put onto the software, they may have something else that we may want to teeter to. Well, guess what? We have forced updates directly through every one of our hardware packages. So we basically feed it in. We do an automatic update, just like an Apple iPhone.
Is it better for the debt ecosystem to have nodes out, or cloud mining, or a percentage of each, or what is better?
The danger of both is hardware doesn't last forever.
Right.
Danger of cloud mining, it's not decentralized.
Can you make the switch at some point? If I have the hardware,
Yes.
but down the road I decide I want to go back to cloud mining, I can make that transition
Yes.
through debt,
Yes.
or
Actually,
you just get
through
another
investment.
box or
through the back
or like
office,
Yeah,
even.
yeah. You basically, It's actually been done through the mobile app. I can actually kind of show you real quick.
Do you recommend getting the nodes initially so that you control when you're online, but then at some point down the road, as it gets a little older, maybe making that transition? What would you
What is
do?
your ideal?
I would run it on the hardware.
I'd run it on the hardware, and there's a lot of reasons for it, but I definitely would run it on the hardware.
Okay.
It decentralizes it directly through. It's one of those things where it's easier to manage, in my personal opinion. As much as people say cloud money doesn't go down,
Oh yeah, we
does.
Does cloud money go down? Does it just disappear sometimes?
Hey, well, just so you know, Jason knows InvestView.
Okay.
So he
that was
sold probably about I don't know how much,
millions of dollars, yeah, but InvestView, and that was my last experience, and that was I walked away from that. So when Brian called me and goes, "Hey man, we're not trying to recruit you, but I've got this mining thing I want to talk to you about." I had
You're
PTSD.
like, oh, hell.
I almost crawled up into a fetal position for a little bit.
So
That's part of the problem with mining. And one of the solutions is we want something that's tangible in somebody's house. They can see it, touch it, feel it. They know it's there. They have control over it.
Amazon has never gone down until it goes down. The problem we have as a company for doing cloud, and we are cloud hosting everything right now until hardware basically starts getting out and dissipated. We have 1,000 boxes currently right now that are in production to be delivered out. We actually took 500 molds are ready for that project, up to 20 licenses. The value of that being in your box, your internet in your house is actually more reliable than a data center. As much as everybody sits there and says, oh, look, I'm getting 100% mining capacity. No, you're not. You're getting 100% of what the data center goes. And everybody gets 100% today because guess what? Everybody's at the exact same place. So when the power goes down,
They're all the same.
they're all the same.
Yeah.
And it works really well until Amazon goes down for a full 24-hour cycle, which actually happened last year.
But you don't know my internet provider. I cuss at it all the time.
Say that. We actually have two in our house for one each side of our house because it's so.
There are certain regions that it actually makes more sense to cloud mine.
Yeah.
Third world countries are going to deal with it a lot more than you will in other areas. Downtown places in India are totally fine. You get out in the suburbs, not. Latin America, same way. If you're in the major metropolitan areas, internet's great. You get out in the hills, it doesn't exist. It's
Rolling blackouts are just a part of the
rolling blackouts, they expect it. So I think that more depends on the jurisdictions of where you're at. For debt, I want boxes. Boxes then build out the blockchain to a point where there's not a single government agency, there's not a single one actor that could turn around and shut you down. Amazon could get a cease and desist letter and say shut down the debt box today. I'd be done. I know this because, not because of a government, but we actually hosted my last project on Azure. It's a Microsoft cloud hosting product. We got less than 30 days notice to move 22,000 licenses off their network and onto AWS or something else. They didn't tell us where to go. We had to search, well, who the hell can take this? Because we weren't actually doing hardware. That was a learning lesson for me saying, I never want to do this again. It was hell. So for me as a company, I want boxes. I want them not only for the protection of the ecosystem, I want the protection of the individual buying licenses because it will be more sustainable long term. No one sees the downage right now because everybody sees the exact same. I can't go to Joe's house and Joe says, oh, look, mine was up 3 hours longer than yours. Why? Well, because if mine went down for 3 hours, his went down for 3 hours too. So the numbers are identical. Does that make sense? It doesn't go. When you start getting out, you are going to find certain people are going to make more than others. Why? Their internet service provider is better. Yeah. Does that make sense? You're probably going to make more than anybody in India ever. Why? The internet's better here. But those boxes protect the ecosystem.
The cloud mining has been.
I know when they're in all these different countries
So-
too. That also is another right because not all countries are going to ever have internet issues all at once. So
Correct.
if this one, Arizona, Gilbert, Arizona has it for a minute because of a blackout,
Don't worry,
California
it rolls over to
and
Nevada or
Mexico and
Correct.
all that are still on.
Correct.
That makes sense. I love that.
So it doesn't matter. The transactions, what we're doing on the blockchain, will never drop as long as we're on our own blockchain or on our own network. So as long as like you're trying to basically run in your house, let's say yours is on, but everyone in your other neighborhood went down. This is a smaller thing. The transactions are still happening. They're just happening through you. Everybody else, no one else got paid. You got paid more. Why? You did more transactions
So
because you were alive. You were there. You were on. If Russia decides to come out and ban mining, we have a ton of nodes that are in there. If half the country goes down, does that mean that our network is no longer viable in Russia? No. Because they'll just ping out of another country in Europe. They'll ping out of the next closest location to kind of run. The network stays the same.
Instead of having one data center sitting in the middle
Yeah.
of okay, so NATG opens up at the price point that it does, see a little bit of a spike out of the gate. I'm assuming at that point there were people that wanted to test it, sold, brings it back down to a certain point where it's at today.
There's two major things that happen every single time we release a token. There's no way to get around it. Number one is, we call it the teeter-totter effect, okay? When you have a ton of people coming into a market and want to buy, but the teeter-totter, the liquidity is very small. We're putting in liquidity as fast as we can, but until that teeter-totter gets out to, let's just say, $5 million, $100,000 in buying pressure can move up 100,000% in a token. As you start moving that teeter-totter out and widening the liquidity, it takes a few days to do that. You have huge spikes. We went up 600% in a day. And I'm looking at it and say, well, this is going to come down. You know it's going to, because you shoot up that much so quickly. People that have been around the projects know they can buy it back after they sell it right now. So what happens is they sell off at 600% up. They know it'll get back there a few months from now. All they're doing is they're double and tripling their money. They come back and they buy double or triple the amount of token when it's wider. Does that make sense?
Sure.
They're arbitraging it. So this happens at every single project. There's no way around it because we launch things on PancakeSwap. It's just a functionality of tokens in our ecosystem because the way we do it, because we mine for about 45 days before we go live. We're not an ICO. We could solve this problem if we're an ICO. Everybody gets the same tokens the same day. Everybody put the same amount of money in. So no one's going to sell it for less than they bought it for. In our system, we sell miners. So people are accumulating that for 45 days until we launch. And they look at it and say, I can get every dollar I have in this process off the table when it hits about 300%, 400% up. Oh, they're taking it.
And take their initial cost
They take
out.
all their, they take all
They're
their.
just playing with house's money.
They're playing with
And
house.
that's what they do when it first launches, and you see that spike, brings it back down.
It happens almost every project. It's happened so far. It's happened in every project I've done so far, and we have not yet found a way to stop it. So we just let it happen. It doesn't hurt the ecosystem the way it's situated. Everybody's still making their daily revenues. Once the liquidity gets in, that's wide enough. There's enough liquidity. It doesn't really matter.
It doesn't move it
It
as
doesn't
well.
affect anything.
Obviously the people that are in earlier on get the advantage of being able to accumulate tokens.
And they accumulate a lot more tokens a day than will ever happen again in history.
Yeah, and that seems to be slowing very quickly or dropping pretty quickly.
Some of that is two factors. Sales right now are very, very high. And so when the licenses are coming online and running through the system, there's a dilution factor that's kind of happening right now. And it's not offsetting the opposite side of it, which is the new token coming into existence yet through the EGI pool to basically devastate it. I believe it's about halving that kind of levels out. Ironically, you're going to go through halving, you're going to make more money a day.
right. Even though people start to see less tokens, the value starts to go up.
Yes. So you got to look at the amount of tokens the amount of tokens you're getting is going to go down, but the value of those tokens goes up dramatically. So if you basically go through pre-halving in natural gas,
Which we are right now.
which we're at right now, everybody's looking at it saying, "Oh, I'm making $5-6 a day." No, you're not. You're making close to $25 a day. You just got to wait to sell it. Does that make sense? It's a visual thing,
And it's hard, and this is
it's
what I
hard.
battle, because people are like, oh, well, I mean, it's going to take me 18 months or 14 months to be able to get to the point where I can get my investment back. And I said, well, yeah, number one, but there's milestones that this token will hit that have not even, we're so early in the process.
Here's what I like to look at. I like to look at proven track record of anything. Okay. Black gold right now is down about 42% off its highs. Why? We're tied to BNB, and BNB is down 40%, and then we had a 2% sell-off because of the fear of selling off by 40%. When you're tied to another cryptocurrency, when that coin drops, liquidity pool drops, and that liquidity pool drops, it drops the value of the token to the overall value of the pool. It's pretty simple. So even in that process, the fluctuating up, fluctuating down. Today, black gold is up 66,000%
From where you launched.
Yes.
That's insane.
And you're 7 months in.
Yes.
That's right?
Yes.
So you still think, even at 15,000 today, a black gold node is still has value because of where you think, or where your point of where you want to take that.
But also didn't you say?
Because Chandler.
No, but didn't you say also you put this at an 11-year?
We've
like
sold
you probably did that,
tens
right?
of millions of dollars of black gold in the last few weeks from people that understand what is going on.
See, so Chandler's like, yeah, black gold's not doing that much right now. Maybe I should have got NATG. And I said, well, I don't think that you understand. And I'm trying to get the sale. I want to get all of the hot buttons. I want to get. I know that there's a certain point where we can't obviously can't guarantee anything. What I need to be able to do a better job of is to take people through the process a little more of, hey, look, I can't guarantee these things, but let me just explain that when the halving happens, there's potential. Down the road, when the profits that are reported from the projects that we were a part of, when those happen, there are potential. And let's take a look at black gold, and let's look at the fact that they're up 66% even after this. Am I missing things? Like, what else can I share that gives people the big vision of potential?
Let me give you a visual.
Okay.
This works. So this was a BGLD mining license that was turned on day one. We just did a couple test ones.
Can I take a picture of this?
Yep.
Take a picture of that. Sure. So this is a license that was turned on day one.
This is the exact same license on January 2nd. Now, notice that it made $17.08 yesterday. It made $17.11. But look at the difference in the coin. This day I made 15,000 coin. This day I made 2.
Okay.
So I really didn't make $17 that day.
Right.
Do you see what I mean?
Because
it has 15,000
the
coins.
value sustained itself as the halving took place, and so even though right now in your mind you're saying.
So people are caught up into the dollar value of
Right.
it, right?
Right.
Yeah.
But again, Bitcoin did the same thing. A Bitcoin miner back in the day would have mined 10 Bitcoin a day. But today it would take 10 miners a month to mine 1 Bitcoin.
Is it possible, and would there be any liability to this to have
Can't do
a
it. I already know what you're
3 to 5 minute video of you just explaining this?
Tokenomics, like in
Just
general, like a
the
tokenomics.
tokenomics in a very overview setting is fine. When you start putting financial price points behind it,
Then all of a sudden you're setting expectations.
the back end of my attorney's neck hairs go up, and he looks and says, "Veto."
It's just a basic understanding of tokenomics in
Yeah.
general that people
I
don't
have no
understand.
problem sending you some
And it's-
screenshots of this and what the miner did over time because past performance is fine to
Yeah,
show.
that's what.
But
you still have to be careful of setting an
It's
expectation.
the setting expectations that this project's going to be just as good as the last
Right.
project, and those expectations we are fighting. We are in a heavily gray area Wild West arena with crypto. We are in a very highly scrutinized, risky business in the market, direct sales. These two put together is somewhat toxic, which is actually a talk that me and Joe had multiple times before kind of running through here. And the reality is, I want people to pull up their dashboard, and I want them to get involved because they're okay with the $5 that comes out today. I want them actually okay with it. I want them okay because they see the bigger picture of what could happen to the oil industry as a whole.
Which is what?
Well, do you think that natural gas is higher today than it was yesterday?
Yes.
Then it's a value proposition. Do you think that more natural gas wells are coming online tomorrow versus today, next year versus this year? Perfect. Do you think blockchain technology needs to be in place for those ventures?
Yes.
Do you believe the world's going to blockchain?
Yes.
Then you should buy a node.
Because the more because if they're going to be coming online, why wouldn't they want to partner with us? Because we're going to save them money because it's scam.
Yes.
Well, why wouldn't you want to be a part of that and make money?
There is a deflationary tokenomics, and you can get into this. There are 3 major functions of the token, and this is creation, value, and burn. Creation is how the token goes to the EGI pool to begin with.
Say that again.
Creation is how the token gets into the EGI mining pool. How the coins are created.
Okay.
Second is the value proposition, what people are willing to pay for it. Mm-hmm. Third is the burn that basically is coming off, which basically limits supply. Mm-hmm. In a standard supply demand graph, you basically look and there's always an X factor, and that changes based off of more supply, more demand. So you'll see this pivot.
Yeah.
Does that kind of make sense? In this, it's interesting because the longer the project goes, the less token there ever will be. There will never, ever be token re-put back into the ecosystem after the burns. How do burns happen? Burns happen organically from the mining pool every year. That's simple to explain. It's understandable. It's an anniversary year, and it gets cut in half. It's simple. People understand that. What people don't understand is the trusts. how the trusts function. And if anybody actually understood this, they'll understand why I don't sell tokens. Or is it, well, how many have you taken? I haven't sold one damn token yet, and I do not plan on ever selling a token, at least for my foreseeable future. The reason is I understand the power of what is going on. Now, how did I get token?
When you say selling your own personal token?
Yeah.
You
Now,
haven't sold any.
How did I get my personal token? I mined it just like everybody else.
You have nodes.
How do my developers have token?
Mining it.
They mined it. Do I have any token that's ever been in existence in history in any of my projects that was created and gifted? No. It all originated from a miner. In an ICO project, they're dangerous, and here's why. You go out for mass sells. When you look at a stock for IPOs, why do people want to buy that IPO stock day one? They get the lowest price possible. They think it's going to go up. What are they going to do when it goes up?
Sell.
What happens to the stock when they sell?
Drops. Same thing.
Who made money?
The person who got in the quickest or bought it at the lowest price.
But now somebody
at the
else
highest.
is in control of that stock.
Yes.
Now, what if that major liquidity provider on IPO day bought it all? Oh, but by the way, we burned it.
Mm-hmm.
It's gone. He can't ever sell it back in the market. He doesn't have it. The oil trusts and the natural gas trusts work functionally as a liquidity provider in the marketplace with no sellback. They put money in that will never come back out.
And it's completely indiscriminate. It doesn't matter what market conditions are going on. It doesn't matter. It's just a revolving door that's just going to
Think about having a small company. And a small company needs X amount of money to grow. So go take a line of credit. Banks want their money back.
Yeah.
An investor wants a dividend and their money back, or equity. They want the long-term projection. What if you had a way to basically put a liquidity provider in play in any business, in any economy, in any functional, profitable entity? And it was a gift. It's called Tesla. See how it did? Okay, so it's called government, printing it. The government's been the only one to be able to do it so far. Because they do it in tax credits, they do it in savings, they do it in initiatives, they do it in sponsoring. Government's been the only person in history to ever be able to do this. And they functionally dictate what company lives and what company survives and what it does. Chevy versus Ford. GM versus Ford. You look at Tesla, the batteries. Half these battery companies should never have been in business to begin with. They were never profitable. But they were able to survive and get to the point where they can actually sustain today because you had government-backed support. Now, does government ever get that money back? No. Mm-hmm. It's injections in. When Tesla's able to offer their cars for $100,000 when they'll cost them $180,000 to build, how do they do that?
Because of the...
Does the government get paid back that $80,000 anytime?
No.
So how do you become close to a government? You develop this type of system that has a liquidity provider that has zero call to sell. So imagine a trust. And you basically have money coming in a flow. But then this basically goes into a token and purchase. Okay? Where does this money come from? All of the exploratory companies that we are physically partnering with, these are royalties. Mm-hmm. Okay? That's the easiest way to explain it. It's just royalties. Doesn't matter what project we're in, it's royalties. Those royalties are as big as we can possibly make them.
Based on the value that you provide these partners.
Correct.
Some projects we have a 20% royalty, some projects there's a 2% royalty.
If they're a larger exploratory company and they have a lot of track record, we get less of a royalty. Yeah. If they're newer and they have a higher risk, but they need to get their investors a situation to go, we're not an investor. We provide them technology in order for them to want to give us X amount in return coming out. I have to trust them that they're actually going to get to permission to get to the bottom, and they have to trust me, the fact that my scans are going to get them to what they need, and then they can go out there and do their thing. They do it anyway. They go raise money. They go do the deal. If we have one of these, it's still profitable. We have 3 of them, it's more profitable. Mm-hmm. We have hundreds of them, it's exponentially more profitable. We're 7 months in. We have 3 oil companies we're currently partnered with. 3 exporters.
Who's selling those partnerships?
Now, that is something I'm heavily involved with.
Okay.
Because it's all based on the scan technology.
Sorry, I like to know.
that actually is something, that is one thing we do regularly.
Okay.
Now, why? That is something that takes a lot of my time. But once that is set, the attorney firms write the contract up, it's set into a trust, it's audited by third parties, and we just sit back and say, okay, great, we got our money and it's good. The nice thing about being in the commodities businesses is everything is tracked by governments typically. How much oil comes out of a particular well, it's physically logged in 3 different locations.
So it can't be
It's not like you can have
manipulated.
Yeah, go through. Now, when you're in West Africa, you get some of this.
There's going to be some slippage.
There is some slippage. It's just part of
Are
money.
they putting it in a thing on their head? Walking?
But once it gets put into the blockchain, there's no more slippage because you recorded it. So once it gets off the sluice and it gets put into the separator tables, the separator tables then are logged. That's on the blockchain. You know your slippage at that point in time. You start fining people, or you get your money back because you know what's there. But before that, when it comes off, if they didn't wash the rug out completely, then there is some slippage. Does that make sense? But we have it from basically sourced from vibration table through. The refiners know exactly what you dropped off. They weigh it right there in front of you. They physically scan it. You know exactly what purity it is. It's scanned. It's logged directly on the blockchain. So we try to limit, obviously, the risk of slippage, but slippage happens almost in every single business. It's spoilage for food. It's employee theft. It just happens. But we try to limit that as much as possible. So imagine if we're dealing with exploratory companies, and we're going to take the energy sector. If we're dealing with an exploratory company, are they an operator?
Yeah.
No. Exploratory companies have one function: to find and
Oh, so
sell
they're not the
off
actual.
the well.
Okay.
So hypothetically, let's just say an exploratory company hits. Let's say it's 1 million barrels. We have, let's just say we have 20% royalty on this. How many barrels does the ecosystem have over a period of time that we get? Maybe it's 5 years, maybe it's 7 years, maybe the depletion is the first year. What happens here is the exploratory company, if it's less than 3 years, will physically sit there and drill it out because it's not worth selling it off. What if it's 100 million barrels? And it's a 10-year well? Well, that's $10 million a year. That's pretty good, right? 20%, that's $2 million a year you get paid for the trust. Now, over time, that trust will continue getting payments. It continues to burn, it continues to buy token out, and continues to run. What if that's sold? Maybe a 10% discount to Shell to come and operate it. All that money goes where? The trust.
Mm-hmm.
What does the trust do with it? Buys it the
Buys
coin.
token.
Buys the coin in
He
a.
burns it. This is why you wouldn't. People are going to say, why wouldn't you just keep the profits yourself off of the?
Throw it out.
Okay.
Yeah.
Okay.
The reality is, I'm a lot more profitable this way. It's not a greed factor. It's just a function of
It's an
economy.
Nice.
If you look at, do you have Dexcam on your computer?
No.
no.
I'll send it
Do you
to
have
you.
internet?
I don't. I'm not connected to it.
Let me pull it up. I'm gonna show.
What do you want me to dex scan?
Huh?
I have a crazy idea. I'll tell you later.
Okay.
Dexcam really quick. Do NATG. Just I should do
I
black.
got the SC scan. I don't think I have dex scan. Can you pull it up there?
Yeah, so just go over here to search. Put BGLD. So this will be a car example.
Okay, can I ask a question, or is this a bad time to ask a question?
No,
Okay.
please.
Could you? I know with grow, right? It's not going to be tied to just one, like crop. Per se, right? Could you say tie it to? Does it make a difference if the crop is in high demand or is being sold off to a certain amount of people? Like this crop here gets divided and sold off to 100,000 people. Does that make the profitability for you higher or lower? If you know that crop already is allocated to a group of people of say 100,000 people or 200,000 people.
The co-ops by far are why grow works. It produces co-ops exist today, just on the blockchain arena. Co-ops are done every single day. That's actually how farmers sell corn. They sell peas. Any agricultural salad. I mean, it doesn't really matter. Any crops currently today are all done based off of co-ops in the United States. That's typically how all of your commodities and that are run over the exchanges through the mercantile. They look at the co-ops, they look at the average prices of it, and that's actually where they tag the price for publicity. What we look at is we just want to basically recreate the Chicago Mercantile Exchange into a more direct blockchain deal. So we're partnering with certain companies that not only want a co-op feel, but want more upside potential. You're going to see really quick why farmers actually like this idea. So I want to show you with oil.
Right.
Okay, we got 3 wells. You calculate the 3 wells and get them situated. It's not so much the cash on cash that currently is situated there. We could basically make somewhere close to about, let's take Nebraska. Nebraska would be a cash check to me with the royalties of, call it about 120 million. Okay? I'm not shying away from 120 million. That sounds awesome. What does that say?
$6 billion market cap.
What's more profitable for me? Do I like the 120 million? Yeah.
Sure.
What's more profitable?
Yeah.
Who benefits with this?
Not only us, but everybody else.
Not
Everybody, yeah, a lot of people.
Everybody.
Anybody that's involved in the project.
If I was doing it myself, who benefits?
You do.
It actually makes more money for me
And more money for a lot of other
and
people
makes more
too.
money for other people. So it's a good win-win.
So it's win-win.
So one of your biggest unique selling propositions is the fact that you take the profits from the royalties and you buy the tokens and remove them, which creates a deflationary effect that drives the overall value up in time.
Because
Am I understand that correctly?
We always have a guaranteed buyer for the coin.
We always have a
Which is you.
Which is us.
the trust.
That's the trust. Okay. And then the trust just you're not holding on to those coins, which could ultimately create a whale effect. You're burning them. I love it. So this gets me excited. Okay, so one thing that comes up often is, yeah, but Travis, it's going to cost me 10% just to transfer out of their wallet into this wallet, and then I got to pay another 10% to exchange it. That's 20%. So my offset to that, of course, is, yeah, but you're understanding that that's helping contribute to the burn wallet, which helps create a limited supply. What else does it do? And why do you do
It also
that?
Keeps outside sharks away from our ecosystem.
Okay.
Yeah,
Because nobody's going to come and day trade our coin paying 10% fees on every transaction.
the biggest disincentive process in any cryptocurrency right now is the whales, number one, and it's the snipers, number two. Those two things are actually very deadly to ecosystems. The deflationary actually helps our ecosystem, number one. It actually keeps bad actors away. Just what you just said. If someone tries to go buy this token and sell this token, if they don't make 10% in a day, what happened? They lost money.
So that eliminates the snipers, so to speak, that are just here to get those small little profits on a day-to-day basis.
And what do they
Micro
do?
arbitragers. Yeah.
The micro arbitrage. And what that actually really does is steals money from the ecosystem. It steals money from the trust. It should go to the end users. So
By removing token.
by removing token. So what's happening is if they decide to do it, great. They're helping the ecosystem. They're contributing to our
They're just
wallet,
burning and burning
and
and
burning. And I love it when they don't realize there's the 10% burn and they're out there sniping 4 or 5 days and they lost 40 or 50 grand. And I'm literally watching that. And I'm sitting there shaking my head saying, well, that's going to hurt. And eventually they realize, I don't want to touch this coin anymore.
Yeah.
Does that make sense? They believe they can, because the way that crypto works in a highly fluctuating area is typically large snipers can come in and bring huge amounts of money in. Let's call it $500,000. You give me any crypto or meme coin, you give me $500,000 and I could detriment that coin probably 3x, 4x my money. The problem with that is, where did that money come from? It came from the small person that put $5 in.
Yeah.
When I sell off, what happens? I made money.
Somebody else.
They lost.
Someone lost money.
Yeah.
This is a protection mechanism for our ecosystem to make sure that what I know about trading over decades doesn't happen. Or if it does, I am heavily penalized for it, and I won't do it again. And if I do it, the losses I took helped everyone in my ecosystem.
Mm-hmm.
Does that kind of make sense?
Yeah.
Yeah.
So, although people don't like it, there are ways to shortcut it. There are ways to help our ecosystem save some capital. Link your debt dashboard in with a trust wallet. You can trade directly out of there. You save 10% by transferring. You don't have to transfer from debt.
Oh, so you're not paying 10% to go right to your trust wallet when you transfer out of
You do it
debt.
out of the piggy bank.
If you do it out of the piggy bank, but everybody pays that. That's just a transfer you have to pay. But if you take your seed words from your debt wallet and you add them into trust, it's like looking at your bank account from your mobile app. It's looking at your mobile app versus your desktop. Coin actually doesn't move. on where you're looking at it. It's sitting on the blockchain.
Yeah.
So those seed words,
Gotcha.
you're not moving it. Now, if you change from this seed word wallet to this seed wallet, you moved it.
So you link the seed word wallet.
Link the seed word wallet, you
together.
don't pay the 2%.
Then you technically can get it
So
over
when you're
from,
setting up your trust wallet, you go import wallet instead of create wallet,
Yes.
and you import your seed. Your
You save
debt.
10%.
Okay.
And
That's
then
a big
you
deal.
can
Yeah.
trade through. Now, we are hoping to basically solve this problem. We are close.
Are you gonna come out with a wallet?
No, I'm coming out with something much better.
Oh, okay. I was like,
We have a wallet already.
okay.
Have about 2,000 users on it already. We are coming out with an automatic swap function in our wallet,
Ooh.
which means they don't have to move it anywhere.
Beautiful. That's fantastic.
And they can swap it. What I'm trying to do with the deflationary is stop outside actors. I'm actually not trying to punish our ecosystem. I'm trying to stop that actors from coming in and stealing liquidity from our ecosystem. So if I can try to find ways to save our ecosystem money, I always will. So this particular function will actually allow you to swap from everything to debt. Debt has no tax to it. So if you want to swap from NATG or from Grow or from Black Gold into debt and then move debt to the exchanges to sell, do it.
Will that be a feature that you charge money for to have access to that?
Sure.
Like an extra add-on?
No.
No,
Oh, really?
because it's part of your ecosystem.
Oh,
Okay,
okay.
so let me ask you this. This may be a dumb question, but with debt, will you ever be able to mine debt coin?
You can. Every one of those licenses sold in 2 weeks.
Oh,
Did you get some?
dang.
Do you have any extras?
He's like, no, is there anything?
I should have
like,
bought more.
Dang.
They sold out like 3 days after I came.
I bet.
When people saw the vision, they
Yeah,
looked at it
I would have
and
been all.
Okay,
I keep looking at that debt going,
this
how
might
do I
be-
get one of those miners?
This might be a dumb
That's the biggest
question.
question I get too. Can we get debt licenses? That's why I asked you.
There'll be
I know.
5,000
There'll
more.
be 5,000
next year.
available in January. There'll be 5,000 available the next January. There's 30,000 licenses available. We sold 15,000 licenses in under 2 weeks.
How much will they be potentially in January?
We do that based off the debt council's
At the time.
At the time, because the token, in my mind, every single debt license that currently is mining will be mining over $200 a day, even though it's only mining one, because I have a belief that that token will pair BNB.
Yeah, that's beautiful.
So
I want one when they come
I
available.
do
in
too.
January.
Can we be on the short
put me on the
list
waiting
of-
list, please?
Yeah, the waiting list. I have
go
a
ahead.
question.
Joe was in my office and we were trying to launch debt with your ecosystem, by the way. He just wasn't quick enough.
So I have a question.
Well, we're still launched pretty quick.
It was launched pretty quick. No. I was actually with a different company. You listed who it was.
Okay.
And they struck me along and they owed me a crap load of money. And I said, I don't want to get in a long-term relationship with a company that I don't need you. And our ecosystem is growing so fast. They were supposed to launch our product on November 6th.
Maybe. How do you foresee the relationship with? Okay, so this is a two-part question. So the first question is trying to understand if more and more awareness. You said earlier that there's a lot of nodes that are coming online right now.
Mm-hmm.
So and because there's not a lot of I'm trying to remember the word that you used, but not a lot of liquidity. And it's not liquidity, but it's fluctuating based on that $100,000 that's withdrawn, and you're feeling it more right now. I'm not sure exactly what the word you used.
Actually, I think right now we're pretty wide.
Okay, you're starting to go wide where you don't feel it.
Yeah.
Here's my question: with the awareness that's happening, my understanding is more awareness creates more demand. Over time, more demand drives the value up, especially as we're pulling out. But I guess we haven't really burned anything yet. So my question is,
burned anything from what?
from the burn wallet, from
NATG.
NATG.
Oh, NATG.
Just transactions alone burned
They start-
1.8 billion token
Okay.
from movement.
Why wouldn't we see an uptick as more and more nodes are coming online right now in the value?
People are not withdrawing from their wallets like they should be. It's the number.
We're keeping it in the piggy bank.
People have this psychological thing in their head, and I keep trying to tell you that 10 cents out of $1 or 10 cents out of or 10% of $5 is the exact same thing when you move it.
Yeah.
You freaking move it. My
when
wallet
it's
is a
moved.
target. The mining pools are our wallets. I need people to withdraw the dang token.
Which is crazy that we want to.
But
Withdraw and put it into
people like
their-
to see it. And here's actually somebody explained this to me. And they're like, but Jason, if I take it and I move it to my other wallet, I can only show people I'm trying to get involved 10% less money I'm making. And Alex says, well, shouldn't you tell them the truth?
So you just want people to withdraw the money, because I'm holding all mine right now in
the piggy bank.
In the piggy
Yeah.
bank.
Pull it out!
So we need to start teaching all of our people to do that.
At
Yes.
what
Okay.
at what
That's
amount
good.
would you say is the
We
ideal?
lowered it from 500 to 250. The reality is we may lower it again to try to get more people to do it. In any ecosystem, you understand, it doesn't matter if you're an exchange, it doesn't matter if you're a new project, these large wallets are targets for hackers. It makes no sense for them to go hack Joe or you. It makes perfect sense to go hack one wallet. That piggy bank wallet is a target, which is why we actually change it out year over year. We physically integrate new wallets, we do new seed words. We try our best, but understand, if we get hacked, they're not going after your wallet. It's not worth it. They are going after my wallet. The lower we can keep that wallet time over time, daily withdrawals would be fantastic.
Minimum weekly withdrawals to your trust wallet. Okay.
We are trying to look at potentially having an opt-in function, and you can set your automatic windows from daily to weekly, and then I force it out to you because I really do want, as long as it's at a threshold. The reason why we have to have 250 is we pay that transaction fee. So I mean, when people are taking it out, if they physically took out $2, it may cost me 33 cents for $2. We have, in order to move our token right now, it costs, depending on its prime part of the day, it's about 33 cents. If it's non-par, we can get down to about 7 cents to move. So I can't have people pull out $1. I'd be losing 33% of the transactional full just to send it. But we're trying to find a happy medium to get people their dang token out.
So essentially right now, we're just not seeing that movement, even though the awareness is coming online because everybody's holding their money.
Yep.
And because you have a lot of people that ultimately don't want to sell because they believe in the long-term
Correct.
part of this project.
But
over time,
believe
it'll happen.
it in your own wallet.
Yeah. now, how does people, as it's coming online, we help create the awareness. So the relationship with IX and debt. The value that we bring to you is that we can create and drive a lot of awareness overall, not just to NATG, but these other projects. And that's where right now I think that we understand NATG. Like I have people ask me, should I buy GRW? I'm like, I have no idea. I don't know. I don't know anything about it. Should I buy gold? I don't know. But I see it on the sites. And I know that this is a new relationship for us as well. So how do we bridge that relationship so that we can bring you as much as value as possible? And how do I sell it? Like, should we be focused on NATG right now because that's the main focal point, or are there other things we should be focused on? Or
So this is a, I hope I don't step it. This is something it's a trust but verify process that we've been going through with IX, if I'm being honest.
Yeah.
I took a risk of getting into this space.
Because it's MLM.
He told me to. His background is.
I'm an Amway goer.
I have a different background. My background is I could take this product into every single family RA office across this country, and I could sell. My average sales ticket, guys, is $800,000. My average purchaser is in for about $750,000. My high purchasers are in for $20 million. That's my background. That's where I'm at. I go to funds. I go to family offices that can sit there and diversify these institutionalized. I can go to family offices that have 40,000 clients, and they can go ahead and move 10,000 nodes through their 40,000 clients, and it's diversifying their portfolios. We're in the commodity sector. But the problem with that is it centralizes all the nodes in the United States.
It doesn't get everything around the world.
It doesn't do what I'm trying to do outside the third world countries. So Jake had this vision of saying if we could bring a product into this space that is a real, tangible, commodities-supported ecosystem that will make money instead of sipping it down like juice, I am telling you it's going to work. I feel it's working right now, but I have a lot of hesitations to this industry. I just do. Because everything I've ever known from finance, it doesn't do what it doesn't do what people say it will. Does that make sense? Like, if for every person that makes a check, there's 50 that don't.
Yeah.
That's not a business I typically invest in. So I look at everything as an investment proposition. Is what does it do for the end consumer? What does it do for me? And is it a good value exchange? Is it a good exchange for value? Mm-hmm. And I sat down with a lot of companies, if I'm being honest with you. We get approached daily.
Oh, I was imagining, yeah.
And I had a previous relationship with a company, XYZ, and I couldn't get past their ethics, if I'm being honest.
Their
and
what?
Their ethics.
Oh yeah.
Imagine that.
And everything,
that's probably
every time I
not a
went
hard
into a
one.
meeting, I was trying to give more value to the end individual. They saw that as a way to take more value out.
Mm.
And I basically said, I'm not doing it. I've known Brian for a number of years. He actually is really good friends with one of my partners in this project. They've had about a 10-year relationship. And one of my investors introduced me to another individual that got me to Joe. I actually turned down the meeting for the first 3 days. And finally they convinced me to just sit down with him. He's new, he's different, he likes his community, he'll do it. And I said, great. If I hear one red flag come out of this meeting, I'm probably just going to the RA offices. And he told me about his story, how he got started, how he wanted to give back to the communities, and he actually was honest and showed me what he actually was making versus what he was giving. And I said, okay, we're going to try it, but I want to meet people. So we actually flew to South Africa on our dime to look. I'm in Africa all the time, no big deal, we'll do it. Had a couple other meetings there as well. And the energy that surrounded, I walked out and I said, Joe, you have no idea you're going to sell $200 million in product. He looked at me like I'm crazy. I said, Joe, you're going to sell $200 million in product. And over the next week, I think he had a little bit of fog. And I looked at Jake, I said, I don't think he understands what he has yet. And he gave me a commitment, and it was low. And I said, if you hit it by July 1st, you'll never have to worry, I'll keep the exclusive for this industry. He hit it in the first
2 weeks?
27 days. I gave him 90. 27 days. And, you know, I think he's still trying to get some logistical things done with the company. That's a lot of growth very quickly.
Yeah.
Very.
Yeah.
We're trying to integrate our system with his, and there's some challenges there.
It's not the fact we don't want to launch everything. This gets to the story of what you're going to. It's not the fact we can't launch everything with IX. It's a growing pain. This week, I think, will be a huge one for customer service to say one of the major integration issues is now solved. And we're trying to basically dig through customer service and get through that. We try to get back to everybody 24 hours. It's really easy when it's 200 people. It gets a little harder when you guys are talking to this many people in my ecosystem as quick as it is.
Are our people calling you for customer service, or are people
Well, it's
calling
India people.
Okay.
So when the
All
first week we launched was even like a week before you guys even heard about it, is we were doing things manually, and it's kind of his fault as well, because they told me they were going to launch on May 1st, and they launched on April 20th, and so I was scrambling. Just gave us. Like
I was launching my stuff on it. It doesn't even have to participate.
But I knew the first miners that come on the project were going to be generating 30, 40. In the beginning, they were generating a lot of token per day. So there was a lot of token accumulation for my key people in the first week, in the first day.
10 days.
Yeah, so I didn't want to wait 10 days to get people involved because... Anyways, so that's where all the customers.
So I'll take the blame. It's fine, but it's tech. It's integration.
You feel good about this partnership?
I do. Yeah.
So we've got stories similar to everybody else: horror stories, battle stories, wounds from people that we all know.
Let me be bluntly honest. If Joe ever walks away, I will never be involved in another MLM company.
Yeah.
We are looking. So we have not fully partnered with Joe. We're here for several reasons. My respect for Joe and what he's accomplished and who he is. My respect for Brian. I've just known Brian for a long time, Brian Robert. And because of the situation that we are currently in with a company that is owing us a lot of money and just flat out stopped paying us. And so we're trying to decide what our next move is. We've actually talked about starting our own company. We've talked about, but I know what I'm good at, and I know I can sell the hell out of this. I just need to know that it's going to be there in 3 months or 6 months, because here in the US, he doesn't have another viable product yet that allows us to be able to continue to do what we do. And so I just need to know that it's secure, the relationship, and that we will have other things to sell beyond NATG, and that we'll have the resources and availability to be able to learn and have access at a level that maybe not everybody will, but we will also be ones that will far exceed anyone's expectations of how much we will go sell. So rest
assured the relationship is strong. I typically bluntly honest, I had 5 phone calls last week.
Oh, I heard. I heard.
Was Brian with
one of our mutual friends?
And I physically called Joe on every single one of them. Mm-hmm. And I said, if you would like to do a deal, great. If you want to bill for the leaders, great. Don't care. But I'm giving him your number.
Okay.
I have so much stuff to do with getting the projects to a place where it's giving the best value. I am much better off out at more oil extraction companies talking about our tech than dealing with the headache of integrating with another company.
Yeah.
Joe and I have a good relationship. I think we started this on a $20 million handshake. I've done everything I said I would. I've told him I would. I will continue that. I do business deals with the old-fashioned ways. It doesn't always work well.
Yeah, trust me, we know.
Yeah.
But I can also tell you, it's their loss.
Yeah.
So,
I like that. That's actually.
I feel like we've
you
done
just
that
said
so many
something that
times.
just hit
We've
me right.
done that. We've done that.
I needed to hear that today.
Yeah,
Actually, that was
yeah.
good.
it's their
I like
loss.
I know.
So you got to look at it from a perspective of relationships. And I do relationships in business, and I believe I bring value. I bring people bring value, or we wouldn't be together. If I give my value and someone else doesn't give it, it's their loss. I brought my value. And I think Joe has now known me not that long, 60 days, roughly.
Yeah.
But Brian goes back a long time with me.
Robert or okay.
Yeah.
A very long time. My business partner and him, I think probably have over a 12-year.
Well, and I used to, when I was at Brian's house, Roy would go over with all the palladium and the diamonds and
he would
everything.
tell me,
And he would
stories
show
about
me, and I don't know if you guys still have it, Roy probably has it, but he would show me the scans for all the gold and the veins and everything. So it was pretty cool.
So
we're going to work on getting those published for everybody. So.
it's a very, so we actually publish, we work with Western Oil. Fun story.
Look at this.
So Western Oil has 2 tasks. Number one is we are a royalty provider. We provide them scans. We get a royalty for that. We don't own any part of the operation. Does that make sense?
Are they on your debt council at all in any capacity?
They are, as an advisor for the industry, because I believe it's good to have checks and balances in the relationships. So we typically give each individual extraction company a non-voting visibility, because I like them talking to each other, but I like having people that are in the industry that I'm finance. I know numbers. I can tell you if you're lying to me or not by your financials, but I can't tell you if you have oil down there based off of what you're doing or what you've hit before if you know how to drill. You put 10 drillers in a room, trust me, they're going to weed out the person that doesn't know how to drill. And so I do it more for a synergistic, but I like them being a part of the community. They are node holders. A lot of the scans, when they see what we're doing, they buy a lot of nodes. They want to produce it, but they do it for a different reason. Why would one oil producer not want to benefit off of the co-op of everybody?
Yeah.
It's a way for them to diversify their risk. And so when they see the fact that we've got Archer, we've got Purdy, we've got Western Oil in the room, they look at it and say, oh, I know your well over there is good. I'd like to get a piece of it. How do they do that? They become part of the node network. It weeds out a lot of the underwriting of the projects. Who does the underwriting? The debt council. Who's sitting on the debt council that can look at the longevity of everything. I'm good with numbers. I'm good. Someone can lie to me, but their numbers will pan it out eventually. Eventually, you're going to get to through the BS. But oil is something, if you don't know how to get it, it doesn't matter if you have it. If you can't get there, it means nothing. So there's actually 2 operations in Texas right now where we're running into this particular problem. I love the property. The scans are amazing. I don't trust the driller. So I put them in a joint venture with 2 drillers I do trust, and they're doing the projects together. So I can bring them online.
One holds each other accountable.
One holds the other accountable, or one brings the experience.
Yeah.
Does that make sense? So it's good to kind of form those. So yes, the answer is yes, and that is the reason why we do it. Joe will be invited to the debt council so he can kind of see the inside workings of what we do. He's moved in a product. I think he deserves that seat. More than anything, I think he likes to get through. The biggest problem I have with your space is no one knows how to keep secrets.
There's no such thing as a secret in network marketing. You know that saying, right?
Oh my gosh.
So when we start talking about projects.
carbon
I don't
or
share
things like
anything.
that.
I ask you guys to share it, but if you want.
Well, you just got to tell me what we can and can't share.
I don't like to talk about future projects.
Like drip or carbon or things like that. Okay.
The reason for it is I'll share what we have. I don't want anybody to sit back. So the biggest problem, nat gas actually got talked about before we were done with our hype with black gold. It got talked about so much I had to release it before I really wanted to.
Yeah. Okay.
Because
people stopped buying.
People,
black gold.
I'm for it.
You know what I mean?
Like, oh well, yeah.
So what do we want to be selling right? Do we want our focal point on NATG at this point? Would I, in my position, should I be driving that particular right now?
You can sell any one of our projects that we currently have. I know that Joe went out, I think 2 days ago, and did grow to the network. It hasn't been the fact that all of our stuff is available to his network. It's more the fact that we want to integrate one for customer service with one.
Like we got to finish our integrations as well. So now we're scalable because right now it's semi-automatic with what we're doing right now, but we want to get it to where it's scalable to where we can put in 1,000 orders a day and the system does it instead of having to go through and manually.
You know, he needs a guy that could really understand and develop a sales platform for every single one of these things and knows them inside and out, that could then go train all of your salespeople to go knock it out of the park. I know a guy that could do that pretty well. So,
so nat gas, yes.
Let's focus on that. Is that the best buy right now? Would you say? If I've got money I want to invest right now, what should I buy?
Black gold.
Really?
Yeah.
You think black gold is the one?
Isn't gold
huh?
the what do you call it on the dollar, and the dollar is gonna tank anyways?
price
You're like
index?
it's the what's it called? The maybe it's not. I don't know. What is? I'm asking. What is
And
it?
here's why.
The black
gold to the public right now is over $17,000. Joe has locked in a price for a limited number of them, and he still has them in his inventory. He hasn't sold them. He hasn't sold them because his network isn't used to spending the $6,000 price point. The reality is those licenses should not be in his account and he's selling for $6,000.
We need one.
We do about $7 million in sales through large groups. You understand, we have 3 exploratory companies that are coming online. They all want nodes. How do they buy them? They buy them from me. I'm not telling them that Joe has them for $6,000.
Yeah, of course.
Does that make sense?
Yeah.
Which is going to make the price go. I believe we'll be over $25,000 on that license, and it still will be of value.
Do you guys have a sales floor? Is that how you're moving on your end, or is it just all online, virtual, word of mouth now?
I started this with 4 people.
Yeah.
In this room.
Who are the guys that were doing the 12-minute overview we sent you last night?
Understand? I didn't know it existed.
I'm like, I thought they had to be your guys.
No.
Especially like so I was trying to find a short explanation that explained
and it was wrong.
that wasn't so MLM-y,
Disinformation.
because we have a lot of people that maybe don't want to participate in the MLM, but they just want to buy, right?
Jake,
But still want to take advantage
so
of
much. We're actually reaching out to have them redo it.
No, but at first, I almost didn't get through the first 60 seconds. I'm like, the whole first 60-second thing. I'm like,
did
what?
you watch it?
I'm like, I almost turned it off, but then it kind of like entertained me enough to keep me there. And then I ended up liking that they actually did it. But then their explanation of it all, I was like, well, this is great. So I've been sending that out. And then he goes, this is wrong.
It's wrong.
But half the people don't understand it. It's just enough to build the value. So we need one of those.
It's not totally wrong.
Yeah, it's just a little.
There's just
I hope to be able to, if I can come out publicly, then I hope to be able to create a lot of that stuff that'll be
Please
out
work
there.
with me to make sure it's correct.
That's what I want.
Yeah.
That's what I
Yeah.
want to do, is understand it at that level, so that I could start creating a lot of videos like that.
So the truth of the matter is, our network has done something that we were well under the radar. Okay, in 7 months, I have huge accomplishments that we have pulled off.
Mm-hmm.
Our projects have created over $20 billion market cap in under 7 months.
Is it true you've created a millionaire every so many
Over
days?
200 in the last 7 months.
Since November 8th.
So it really is every 3 days you've created a millionaire in this ecosystem.
The ecosystem has.
Well,
It's never been done.
We probably have to head to the airport fairly soon. I wish I had a little more time, but I want to ask this one question. As an investor, and this is stuff, I know you can't give investors advice, so we'll put that disclaimer out there. Is there a strategy to, you hear all these different strategies, and it's like some people say you got to take profits along the way. It's just part of the process. And some people say, no, you got to hold and play the long game. Like what's the strategy? Like, is there a recommendation for somebody like me, if it was me or Joe?
Let me tell you in a general rule of thumb.
Okay.
It doesn't matter the strategy as long as you stick with it. It's staying consistent on an investment strategy that gets you the other way. It's when you start changing stuff on the whim that will ruin you. I do believe taking profits off the table is smart, but I believe there's a time to start that.
Is it a year down the road?
I look at every investment, whether I invest in a company or whether I invest in a stock. Taking profits tomorrow doesn't make any sense. I took the money and I put it there. I'm a long-term investor. Typically, it's about 12 months. I'll do my evaluation if I start that. And then I take it off on a quarterly basis. So, and when do I stop taking it on a quarterly basis? When I'm dealing with the house's money. So if a stock is in 12 months, I can see that the value proposition for me is I can recoup my capital over a course of a 2-year period on a quarterly basis. I will start taking that off. And in 2 years, I look at it and say, great, I've got all my initial capital back. It's a 36-month investment, and I can reinvest it again. But what do I still have here? I have all of it working for me. It's going, it's running, and it's free. It's the value proposition. Crypto moves faster than anything I have ever seen in my life. Understand, I'm running a hedge fund. If I could continue doing between 12 and 15% a year, I was a god. I did very well. We paid our investors 9. I never had a single investor upset at 9. Based off of what I could get above the line. They shared in anything over 12, but I got from 9 to 12. If I didn't hit 12, guess what? They still got their damn 9. So I made less money. So this, I've never heard of 50, 60,000% types of returns until I got involved in crypto. I am a breed. I bought crypto very young, in not my age, in the project. Bitcoin at $135 a coin was phenomenal, and I was a genius in the office until we sold it for $540, and I said we did amazing, and we all
oh my god!
Partial about Ethereum.
Yeah, I did that. We were mining Ethereum. Well, you guys probably InvestView. So we were mining Ethereum when it was $80 a coin until that thing fell apart.
So you go back in history and you realize we were the first fund to put a 9-figure investment in Bitcoin at $135 a coin. You take money as you go, right? It's one of those things. And then we look at it and we 5x anything and we get the hell out and we're like, we made money until it went to 1,000. And then it was set to 2,000. We did the same thing when it basically hit from 20,000 back down. We reallocated our resources back that direction between $2,700 and $3,500 a coin. I will never sell freaking Bitcoin again a day in my life. It's just my whole period. It's going to my kids. I put money there that I will never need in my life.
You believe in it that much that it's not. It's there.
For me, it's not about day to day. I don't care if it goes from 60 to 30. I don't care if it drops back down to 10. Why? I'm not selling it anyway. It doesn't matter. I've changed my mindset on it. And so I don't look at it. Sometimes it's a little nerve-wracking to do that. So I just try not to look at it as much as possible. I actually put it in a cold storage wallet so it's not readily available to look at. And I just have to do the calculation in my head based on how many tokens are there. And just kind of
well, if you look at like even something like the dollar, if you just kept that money, I mean, the dollar's lost 86% of its value in 50 years, 40% since 2020. I mean, so if you believe that blockchain is the future, then why wouldn't you put at least a good amount of your money in blockchain to hedge the dollar anyways based on, is that bad thinking? Is that?
No, you're thinking like every Fortune 500 company right now trying to get into this space, which is why I believe in it more today than anything else. You look at all these companies, Microsoft has actually been acquiring Bitcoin, even though you have some harsh advocates against it. The reality is they still are investing in it. And it peeves me when you see companies doing things different than what the founders are saying that they believe in. Elon Musk is a different breed. He has come out and publicly said what he's going to do, but even he changes the winds. And as he changes the winds, the market drops. What is he doing?
He keeps building his overall portfolio.
Eventually, the little 3-letter agency SEC is.
I mean, come on. He's gone. He's the richest man in the world because he just keeps manipulating these coins and buying low and selling high.
Eventually, if I tried that crap,
you'd be
dead. So, I just have stripes for a few years. So I don't understand how he gets away with it. But right now he's been able to.
Same way Nancy Pelosi buys low.
Well, he has his company that he doesn't have the voting shares of anymore do it. So he basically puts his opinion on what he wants, but he's not the one. He's not the physical one doing the activity. Yeah.
It's crazy.
So anyway, but long story short, I believe these are long-term hold projects. I believe these projects are great for the cash flow mechanisms for mailbox money. I think it's the true definition of mailbox money. I can't tell you how much money is going to show up in the mailbox, but I can tell you tomorrow you're going to have some. This is a different breed than Ethereum mining. I was a huge Bitcoin miner and Ethereum miner. Problem with the equipment is it burns out. Problem with the equipment is it's expensive. Problem with the equipment is it costs a ton of money to operate and store and facilitate. Bitcoin mining operations ranged from about $3 million to $20 million for us. Our power bills were $500,000 a month. Works great until halving.
Yeah.
Works great until the next hash rate machines come out, and you realize you got to go from starting at S9s. We've got out at S7, we actually went S19 Pros by the time we're finally saying this is over with. We have about an 18-month span on equipment, and the problem is, by the time you take all of your costs and expenditures and everything down, this is more profitable. You want to mine Bitcoin? Here's a little dirty secret. You use the debt box, and you look at the $5 you make off of a one-time license fee with hardware that never goes away. You convert that into Bitcoin, it's the most profitable Bitcoin miner you've ever been in existence.
Just keep buying Bitcoin with what you're making on.
It'll be more profitable than any miner out there.
More profitable than any miner on the face of the planet with Bitcoin or Ethereum.
Because Bitcoin's just going to keep going up and up and up over time.
The equipment's too expensive.
Everybody wants
because everybody's equipment, you can't get into that game.
Get it.
Interesting thought.
But even right now, I mean, the S19s were creating $3 a day,
$3 a day for an item that costs you $8,000.
That's hosted somewhere else that could go down.
What do you
No. I was gonna tell you. Remind me, because I lately I just kind of forget some stuff. I just want to not forget something that I had on my head, and it's like one of those things that might be a dumb thing to say, so I don't want to say it because I'm still learning. Okay, so we were talking.
You better run when the runners run. Show you how to get your money up. Dollar inflated like bubble gum. Markets are jumping like double dutch. Buying up gold till I get a ton. Crypto, yeah, I got some.